Welcome to the Mortgage Broker Podcast, tailor-made for Canadian mortgage industry professionals. Proudly presented by A Better Way Mortgage Group, this podcast is your trusted source for insider insights, market updates, and strategies to elevate your career in the ever-evolving world of mortgage brokering. Whether you're a seasoned broker with A Better Way Mortgage Group or an industry enthusiast looking to stay ahead, our episodes are designed to empower you with the knowledge and tools you need to excel in the Canadian mortgage space. All right, we're back for another episode of the Mortgage Broker Podcast and continuing on with our Behind the Lender series. And today we're very excited to have Jesse Bobrowski from Calvert Home Mortgage, and he graciously having us in his office in his studio today. So a little bit of a different setup here, but yeah, we're really looking forward to diving in everything about Calvert Home Mortgage, the behind the scenes. You know, these episodes, we go deep on what's going on from a behind the scenes approach. And thank you for having us here and being on our show.
Thanks for joining us here in beautiful sunny Calgary, Alberta. And thanks for having us on your show. I'm more than happy to be here and lucky to be working with such a great brokerage team.
You know, like we usually get into just a bit of an introduction about you and kind of your career, and then, you know, dive right into, you know, getting into that nitty gritty behind the scenes stuff when it comes to Calvert. But yeah, like how did you get started and, you know, where you are today?
Yeah, a bit about me and kind of that quick high level career path. So father to two children, husband to one wife, been in Calgary since 2007. I finished university in Ontario and I moved out here to pursue work. I have a finance background and in trading. And when I first moved to Calgary, I didn't have much of a network, but I enjoyed bartending in Ontario at a fancier restaurant, working the wood, and great way to meet people, great way to stay out of trouble, make a little bit of money, although staying out of trouble is subjective. But during that time, I met this husband and wife who ran a syndicated mortgage firm. And out of curiosity, more so out of skepticism, because this is the beginning of the financial crisis, I was like, well, alternative mortgages? And I was more thinking the securitized stuff that was going on in the States. They were great people. They were very gracious, very open. And I got to learn about their business while serving them. And shortly thereafter, started doing some work with them more as a consultant basis. And then I realized how amazing alternative lending was, call it the private debt space, where it is really transparent. Like you're placing a mortgage on a property to support a borrower where the banks can't. And I got to learn more and more on what the banks can and can't do. And it was interesting that how their decision making was being made. It makes a lot more sense to me 18 years later on why they're doing this at scale and how they're doing this. But I just fell in love with the business, and I did that working as a syndicated lender for the first 8 years of my career. In my opinion, timing and the setup was perfect because I got to work with brokers to attract mortgage opportunities. I got to underwrite these with people who had been in the risk management business for a long time. And then I got to pass these opportunities off to investors. I was blessed with really great investors who had a deep understanding of business and private capital and real estate. So I got to learn not only from that husband and wife who were my mentors, but also 30 plus real estate private mortgage lenders who were my mentors. And many of them I still work with today. So
oh, that's cool.
So I did that for 8 years and then joined Calvert Home Mortgage 9 years ago. So I've been in private lending essentially my entire career. Difference between what I was doing at the previous firm in Calvert is we run a mortgage investment corporation here. So rather than the lending decision being made by individuals, it's being made by us at an institutional level. And we manage a fund that's diversified throughout Alberta and Ontario, focused on short-term mortgage lending. Basically, half of our business is lending to real estate investors who I like to call it underutilized housing stock. So that would be mostly houses that haven't been touched in 30, 40, 50 years in urban areas where they're then buying them, improving them through renovations. A lot of time in this market, because of the, call it supply issue with not enough housing, the municipalities have made it easier for them to add units to that, whether it be basement suites or laneway suites. And then they're either selling those to the market or they're going back to the broker and refinancing them within their rental portfolio for long term. And the other half of the business is just the client doesn't fit the lender today. So B client just doesn't fit. We will fund that. Broker will exit.
The typical private.
Yeah. Or a lot is real estate investors just buying and selling, like not adding improvements where they bought this property, they need to sell it. Or today, clients where they bought a property and life situations change and they are no longer going to proceed with occupying it. So we'll fund that and they'll sell it. So that's what most of our business is today.
Just learning about what you do from a product perspective. You just mentioned like the BRRRR type strategy.
Mm-hmm.
Things like that for, a large amount of our listeners in BC, like, are going to get pretty envious of that because it's something that we just don't really have a whole ton of access to currently in BC. But maybe just a brief overview of Calvert Home Mortgage. Like, it's been around for a long time. Like,
we celebrated our 50th year this year.
Yeah, like that's
of being in business. Yeah.
And has Calvert been a MIC the entire time?
So we were formed as a MIC in 1981. So our founder, Everett Keller, who is the chairman of our board and the only non-independent person on our board, he founded us as a MIC in 1981, and he started brokering in 75. Back then, most of the brokering was done to alternative and private lenders. Back then in Calgary, a lot of people were flipping houses. Like, his best clients were flipping houses, and he was not finding a product fit for that. So he decided with another capital partner to form Calvert Home Mortgage Investment Corporation, the MIC, in 1981. And for the first 20 years, he and that partner kind of basically built the business by compounding the returns back into the company with their relatively small shareholder base. And then Dean and Dale, his two sons, Dean is still our CEO and president, Dale's our chief risk officer, came into the business and they learned it. A decision was made that let's support more borrowers and brokers and accept more outside capital. And that was probably about 20-ish years ago. So they had scaled it, and then a big reason why I joined was they had a vision to see more growth, and I was able to do that at my previous firm, and again had a passion for the industry. So we took a chance on each other and have had an amazing run since 2008. We've grown our fundings from $35 million annually to this year we'll fund $550 million in loans, supporting probably 1,400 transactions.
Wow.
Yeah.
That's substantial. And like, that's clearly, that whole BRRRR strategy really came from day one.
It came from Everett mortgage brokering and realizing that there wasn't a product for it. Realizing even we were talking earlier about some of our unique value propositions, and we are one of, if not the only lender in Canada that does our own in-house valuation. So we have a team of professional appraisers that will do the valuations. And today that pays off in many ways. It creates a much more effortless experience. Like, we can fund literally today because of that. We take a lot of burden and pressure off the client and the broker by doing that. We save the client and broker costs by doing that. But that was a necessity because requesting an appraisal on a house that is at a state, and then you say, okay, we're going to add, let's say, $60,000 to this through renovating the bathroom, kitchen, floors, drywall, and now you tell me what it's worth as complete. Today, still, valuators, they don't see a lot of that business, and it takes them, triple the amount of time of a normal and triple the amount of cost. So now you're prohibiting our ability to serve the client. Features like that came about with Everett's passion to serve the client better and his passion to understand what he's doing as deep as possible.
We talked about that briefly off camera, and like, that is a huge differentiator, and it's clearly how you provide, a quicker, speedy solution. But I would also imagine for your investors, that's a pretty strong piece as well, to know that you guys know these properties so intimately.
Yeah, we absolutely treat it as a huge form of risk management. So a huge part of our success in the business is managing risk, right? Like, our sustainability and our ability to continue to do this work is predicated on our ability to manage risk. And by doing the values in-house, we feel that we can do it at a level that is better than relying on third-party values. Now, absolutely, it can be perceived as a conflict, right? Like, theoretically, it could go the other way, where we're taking on more risk. We do have rigor in our system to backtest our values through automated appraisals, and then it pulls out ones that are more than 10% off, either too conservative or too aggressive, because we need to be at market value with the client and to manage risk. So we do have that. And then what's great is we have a bank facility where the banks lend us a significant portion of our capital, which allows us to provide better returns to our investors. But they also are like, whoa, this is really weird, really unique. We need to wrap our heads around this. So they have a system to audit that. And from an operational and shareholder and employee standpoint, I love it because it's not just us validating this.
Yeah.
It's banking institutions validating this.
I'm kind of curious to hear. I mean, we know that consumers and borrowers can have a very clouded view of property values, right?
Yes.
It's typically always on the higher end than what it actually would be.
Always.
How often are you running into scenarios where you're providing the valuation, your internal valuation, and borrowers aren't agreeing? Do you get borrowers that are pushing to do their own appraisal?
It happens. Luckily, it doesn't happen nearly as much as you might think.
Yeah.
And the reason for that is a lot of times it'll happen with the newer, inexperienced client who is relying on a realtor. Like our clients for the most part have been doing this for a long time and have scaled their business. And our best clients from a new perspective have that entrepreneurial mindset where they know their numbers.
Yeah.
They know how much this budget is going to be. They back tested the comparables. So the clients that we get that pushback from are the ones that just have watched too much HGTV.
Yeah.
They think it's easy to make money at this. And I think three of us know, and a lot of brokers will know, is that to make real money doesn't happen by accident. And there's no such thing as a free lunch. And you need to know your business and know your numbers. So it'll happen from time to time. It'll especially happen in markets that we're not as familiar with. And what we do there is we are not infallible as it relates to valuing. Neither is a realtor, neither is a broker, neither is an appraiser. So we get curious. What did we miss? Like, here are the comps we used. Here are the adjustments we used.
Yeah.
You educate us.
Yeah.
And so we will absolutely open those values to appeals and use a make sense approach. And we get to learn through those experts in that market. So it does happen. It especially happens with new clients where we show them, okay, prove us wrong, and we want that feedback.
Yeah, it's a no-brainer. It's just how you're going to get better and continue to, provide that service to your brokers and your clients ultimately that, you're open to common sense.
Yeah.
One thing I was interested to kind of learn more about was, this whole after repair value.
Yeah.
And how does that potentially provide benefits to the end user from maybe a lower down payment program? Is that something you consider?
Absolutely. So we, when lending to a borrower who especially is flipping a house, right? They're buying it to renovate and make profit. The way we underwrite that from a first principle standpoint is their profit, right? Like we'll see deals where it'll come in and yes, they can execute it. And yes, we're safe, but why are they doing this? Right? Like they're exposed, they're buying a house for 600 grand. We're going to lend them 500. They're going to renovate for 60. They're going to invest 100 hours of their time and they're going to make 20 grand.
Yeah.
So we don't want to see them do that. And on an after repair value standpoint, what we do is we take the property, we look at the renovations, we evaluate it as complete. And now we're doing 1,000 of these years. So we're really good at this. And we're basically acting as their not only a lender, but consultant. We want to see them making money and doing this for the next 10 years and beyond. Yeah. So we'll value it as complete. And then you start backing out the numbers. And every number we back out. We back out our financing. We back out broker fees. We back out legal fees. We'll get as nitty gritty as estimating the cost for the utilities while they carry it. Like we'll have them think about adding in snow shoveling to that level of detail. Now we automate that in the form of our flip analyzer and we share that to the market and we open source it to the brokers, and we'll talk more about BC later because you guys got me pumped about that. But anyhow, and then we'll say, okay, here's how much money you are going to make, right? And then what we do as part of our product suite is we allow them to put more or less down. And the less down they put, the higher our interest rate is. But the hardest thing to do is find the property. The profit is in the property. So we enable our borrowers to borrow with as little as $10,000 down.
Wow.
Okay. And the big feature that we see in that is, okay, you might be working with, let's say, $500,000 free cash flow. And you buy a property and you don't expect you're going to do another until this one's done. So you put 25% down on, I'm going to use easy math here, $1 million purchase. So now you're at 250 grand and your budget is 100 grand for this. So now you're only working with 150. Well, you find that same property.
They can't do it.
But you can't do it. So we allow them to borrow with less down. Yes, there's a little bit of shrinkage in their profit because of our rate, but at the end of the day, it's widely profitable.
Yeah, I mean, it's an opportunity that wasn't there now.
Yeah. So we built that for that purpose. We also built it, as we all know, where Canada is at right now on affordability is really tough. And what we've seen a lot of people do, especially tradespeople, is they call it house hacking, where they have $100,000 in savings, but they can't get an A or a B loan today. So they're going to buy this house, they're going to renovate it, they are going to add equity, then the broker knows, oh, I can easily refinance this with my alt lender.
Yeah.
A lot of times they're going to sweep the basement so that now they're creating additional affordability because now they're earning rents off that basement.
Yeah.
So we also see the use case in that young person looking to take that next step in their financial wellness, and we provide them access that other products and lenders can't.
I mean, it's really cool. It sounds like you guys are hands down the best partner when it comes to this product. I mean, even just helping a borrower understand profit, right? Like no one's really going to that extent, and then potentially saying you shouldn't be doing this.
Yep.
Right? Most lenders just want to take the project and get the mortgage funded if it makes sense. Multifamily, is that something I can bring up, or are you guys out of that?
No, you can bring up multifamily for sure. So we are learning multifamily. We don't have deep understanding of it. And again, from a risk perspective, we like to test, learn, and then execute.
Because that CMHC stuff.
We see that as a trend that will continue. Because we talk about, call it the Canadian housing landscape. The way that I see it today is that we have an affordability issue. We have an affordability issue because there's simply not enough supply.
Yeah.
Supply on product that people want to live, not downtown condos today in Toronto and Van, but like single family townhouses, 2-bedroom, multifamily. So CMHC through MLI Select is now really incentivizing entrepreneurs through financing. So they're creating profit outsized of what could normally be seen in the banking world. The market is going there. Our entrepreneurs are going there. So we do not love construction financing from like the ground up. We are capable at doing it. We have done it, but we don't love it. It's not our forte from a risk, profitability, efficiency standpoint. But where we've seen a lot of success is the client is buying that underutilized multifamily where it hasn't been touched in a long time. Because of that, it has significant vacancy. And then they buy that, they improve it through renovations, and then they go to CMHC, or they go to an alt, or they go to an A. More and more A's are doing this. Like we've taken deep looks with First National on how we bridge that. And we see a big future in that and want to support that type of lending. So specifically what we want to do is where they identify this asset that they're going to improve, and then they're going to go to CMHC. We want to be that bridge where then they can get outsized leverage because they brought up the value, they brought up the income stream through optimizing for tenants. And they've improved the asset, the community, and the livability. So that's what we want to do in multifamily.
I mean, especially if you can take what you're doing right now with single family and maybe you don't go to that 10%, approach.
10 grand approach.
10 grand approach, sorry.
But I think we can at least get to the 10% approach.
Because that's a piece that's missing in this, right? People are either going private or they're getting conventional, but they're not getting to that leverage to do what they wanted to do through the project. But then CMHC is coming in after and giving them that money anyways. Mm-hmm. So that would be a massive piece, I would assume, for people taking on these projects. Yeah,
and we've done it. We've done it especially in Edmonton, where there's a lot of these underutilized multifamilies. And we also like Edmonton because it's really affordable there still, income versus rents are very affordable. How CMHC measures that affordability because of how high income is, it creates a lot of opportunity for entrepreneurs. So we've done a number of those in Edmonton and we're really comfortable at doing that. We're comfortable doing it in our backyard in Calgary, whereas in Ontario, we're not there yet.
A lot of people think of CMHC, the MLI Select, like building this, brand new big building, multi-million-dollar investment, where to the product that you're outlining, it's like, hey, there's a lot of these like 6-plex, 8-plex buildings in, Edmonton or surrounding areas that are not in good shape, never been touched in, let's say, 30 plus years. It's such a make sense deal to me, especially knowing that, CMHC is going to come in and refinance it for a substantial amount more money, right?
Yeah, it is. And I'm sure as we talk about that, I'm sure as you guys are thinking, there's a lot in Abbotsford where you got whatever it is, 6, 4, 8, 24. There's just a great opportunity. And we also love it because that opportunity is a lot more accessible to a lot more people. Whereas when you start GCing and building from the ground up, there's courses that teach you how to do this, but to execute on that, you need a different level of experience
100%.
than like our flippers trying to scale into that is a lot different than them trying to scale into a multifamily. They're suited to do that. All it is more square footage than what they're currently doing.
Yeah. This is a good segue into just like current market trends and insights that you're seeing. I mean, this is obviously one that's popping up a lot more. Maybe we can just kind of explore some significant trends that you're seeing in alternative and private mortgages within the industry. You know, you mentioned some affordability challenges that this is obviously going to solve, but what sticks out to you outside of that?
Yeah, so we kind of talked about I'll call it more macro real estate trend on affordability. Within our industry specific, I think we're seeing a trend of consolidation where you have lenders that are growing and becoming more sophisticated and being able to serve brokers and borrowers more consistently with more certainty. And you're seeing that through more professionalized management. A big contributor to that is, I talked about our bank leverage. Banks are looking to support us with capital. They have a certain barrier to entry from a reporting sophistication side. So that money is naturally, in my opinion, flowing to the best market participants and in turn giving them support to scale. So we're seeing that. I'm sure the brokers, they're doing more deals with fewer lenders, is what I suspect. And I don't see that slowing down. For a long time in Canada, private mortgage lending was a lot more small players doing niche things and having direct relationships with brokers. They knew each other well, knew how their products work, whereas now it's become a more larger scale organizations figuring out where their place is in the market and how they're going to serve it. So that's one thing. And then, you know, a really interesting thing that we're following right now is, for the first time you guys have been working in BC for 16 years. When have you seen a real correction in BC?
Yeah, that's a great point.
So you're seeing that in BC, you're seeing that in Ontario. We have a whole generation that haven't understood that the market flows. Whereas in Alberta, we get our asses handed to us every 8 years. You see that bull market and you see that bear market. And that helps, I think, the brokers and lenders better understand risk and manage that downside risk. So what we're starting to see in both BC and Ontario is that there are professionals who haven't managed that, and there's some issues to work out there. And I think that'll continue, because for the first, call it, year of the downturn, all we were hearing from our Ontario partners was, oh, well, we'll just wait for it to turn around. And we're like, I don't think that's the right approach. Like, we've been successful by managing it to, it's not going to turn around, and you got to make decisions not based on hope, but based on the actual market conditions. So those are kind of interesting things that we're following, is that professionalization of the industry, the downturns, which will end at some point. You know, you're going to see more certainty in the market, more certainty in the buying, and it'll flow as any market cycle does. But it is something we're monitoring very closely.
That's refreshing to hear. And it's like, you're bang on. Like, even in my career, I haven't seen a downturn in my market.
Right.
But that just screams opportunity as well for somebody like myself that's looking for opportunity, right? The behind the scenes operations when it comes to Calvert Home Mortgage. And like, let's start with team structure and workflow. Like, what does a typical day look like for underwriters and your credit team at Calvert?
Because of our short-term lending nature, we see a ton of transactions. By a ton, meaning outsized transactions versus our size. So while we'll lend $550 million this year, we'll also get paid out probably $500 million this year, right? So we see a lot of opportunities coming in and out. Private lending naturally will have a lower approval ratio. So today we're approving about 25% of the loans we see. And from an efficiency standpoint, private lending the success of it is in the questions, is in how do we make the deal work? So we want to make sure that we're engaging the broker, because a lot of times the broker will think this is the solution, but as you get into questions, you're like, it could be this solution, or maybe it's a no here, but a yes over here.
Yeah.
So getting efficient from both a business development standpoint and having that experience flow effortlessly into the underwriter so that we are doing our best to unearth the solution. And if there is no solution with us, we tell them no and why. And then we try to always educate, whether it be our content, whether it be our giveaway on the Flip Analyzer. But even at the underwriting desk, no, here's why, and here's who we think you should go to. Because we believe that give is going to result in our ideal outcome, which is the next opportunity coming back to us.
Absolutely.
So that's what kind of the workflow looks like as a whole. But then you have an underwriter who will make those credit decisions. You'll have an underwriter success associate who does the docs, gets them uploaded, will do a high-level review of credit income so that the underwriter can focus on their best skills, which is the solutions, rather than the minutia in that relatively data-based work that needs to be done. And then that'll flow ideally at greater than the speed of business. A huge piece of what we see as services exceed the client's expectations on speed. And speed could just mean availability. Like it can mean like if you got a top broker texting you at 7, text back.
Yeah.
Pick up the call.
Yeah.
And be like, hey, yeah, got it here. Here's what I'm going to do tomorrow morning. Right? So speed, service, and then we talked about product. So from a workflow, that's kind of high level, what it looks like from the broker's experience. And then we talked about doing our own valuations. Unique allows us to work at the speed of business.
Yeah.
And then another unique thing that the broker should know that impacts them is that in Alberta, we have our own in-house legal. So we'll instruct the lawyer just like your banks will, and the client will just work with their lawyer, and then they'll fulfill our document package and trust conditions and report back to us. So that again really helps with speed. Like as soon as you involve a borrower's lawyer and a lender's lawyer,
It slows way.
you're slowing stuff down, and also you're adding costs. And to us, you're adding unnecessary costs for the risk, because again, we do thousands of these transactions. We title insure. We've never had an issue because docs weren't registered correctly. Like that is a low risk thing that we try to optimize for. So we're continuously looking, how do we make the experience better for the client?
It's really rare. It doesn't sound like you guys outsource anything in the process.
We don't.
Very cool.
Now, that also means that we're creating inefficiencies.
Yeah.
So we suspect that as time goes on and as AI improves itself, probably a lot of the easy valuations, like if you're buying a single family house and not improving it in an urban center where there's lots of transactions and you want 70% from us because they're a new Canadian, they don't have sufficient income and credit, but you're going to exit them, and we can aggregate that data and say, yeah, this is a 99% chance they're going to exit. That valuation should be done by the machine.
Yeah.
Eventually.
It's moving so quick, so I like hearing that.
So how do we optimize for that? How do we, even our legal process right now is very doc heavy, but again, where the world's going, we can optimize for that.
You mentioned like just your decision-making process and, you know, the fact that, hey, broker client might have this solution and you're going with a different solution overall. How does the team handle, let's say, an escalation or some sort of a challenge in a deal? Like maybe the underwriter is making a decision to say, hey, this isn't a fit, like, and a broker says, can we escalate this? Like, does that happen, and what does that look like?
It doesn't happen often. And the reason for that is we empower the underwriter to escalate at their desk. And the way we do that is we have a lending standard that says, here's what strike zone is. And then that lending standard allows for exceptions. So depending on what level you're at, you can have exceptions. Typically, they can make those exceptions and note them at their desk. If not, they have a pathway to move up to the underwriter manager who has more exceptions. If not, they have a really clear and easy pathway to move it up to our chief operating officer who oversees all the underwriters. If not, chief operating officer has the ability to take it right to our chief risk officer's desk in real time.
Wow.
So it makes the underwriter work with the broker and think, how passionate am I for this deal to move it up?
Yeah.
And from a cultural perspective, because 8 years ago, me and Dale were underwriting. We were business development.
Wow.
We just made decisions together in real time. Dale being the chief risk officer. So we have that deep understanding of all that pieces of the business. And our mentality is again, that solutions-based mentality. So if we're not incentivizing and driving our people to be able to create the solution, then we're not going to hit our growth targets, our sustainability targets, our cultural targets. So it is a balance for sure. And especially when not a lot of underwriters are enabled to push like ours are. So we reward the hardest deals to get done. We talk about them every week.
Yeah.
Because that builds that culture of, yes, we manage risk, but we're also here to use a make sense approach. And sometimes adding a quarter section of farmland out in Timbuktu strengthens the deal significantly. It's weird. We don't want to do that business from a lending on that farmland in isolation, but we absolutely want to do that business when you can mitigate risk.
Hey everyone, Dean here. Quick timeout from the episode to share with you the ABW Tuesday Mortgage Memo, your weekly market highlights sent directly to your inbox every Tuesday. This is certainly one you're not going to want to miss, so make sure to sign up now. You can do so with a link in the show notes, or you can head to joinabw.ca and sign up there. This is a high-level summary of market developments, regulatory updates, and housing trends every Tuesday. So hope you enjoy it, and back to the show.
I always like to ask this question. You talked about the underwriter working with the broker and how hard do I want to push to get this deal done? How important is it for Calvert, the underwriters, you guys, the relationship with the broker? How do you gauge that?
We want to win with the winners, right? So we want to work with best-in-class brokers who get it. And usually those who get it are doing volume. Usually those who get it are making that same decision. How hard do I want to push?
Yeah.
Like we have a lot of brokers that say, if I don't get this done with Calvert, I just submit it. A lot of the brokerages now have underwriting centers.
Yeah.
I'll just submit it to my underwriting center and let them deal with it. And maybe I make my 25, 50 bips. Maybe I don't, but I am no longer pushing. So that is the ideal mindset that we want to create, is having such a trusted working relationship where they know we're pushing. And again, there's some deals we don't go after, we call it the conventional alternative market, where it's like the really low rate, the deal that should be B, but is probably going to stay with them longer term.
Yeah.
Like that self-employed who you won't take to the B, that belongs with other lenders. So we'll tell them right away, no. We're going to charge you this. It's 100 bips more than this. Go here.
Yeah.
So building that trust is imperative to our success, and being able to win with the winners is imperative. Like we don't want to per se go market wide. We do advertise in market wide, but we spend outsized resources from an underwriting, business development, educational standpoint on who we believe to be best in class.
I mean, that probably answers my next question, is just like prioritization and how that works. Like, you know, you have a time sensitive deal or like a really important partnership, like one of your top agents. Like, does that impact the queue at all? Or is it just you're moving so quick that it doesn't?
No, it absolutely impacts the queue. So your perception of rush is not ours.
Yeah.
Right? Like we can close a deal tomorrow. We can literally close the deal tomorrow. So Dean's stressing out because something fell through and it needs to close next Monday. Okay, Dean, this is a good deal. Here is the commitment. Here's what we need. Just get us this. Don't worry about it. Better yet, Dean, if you want, this is a piece of information we need that's not readily available to you. Do you want us to just grab it from the client for you?
Wow.
Again, that makes sense approach is like making sure we're communicating with the client to take the time stress down. And if it needs to be funded tomorrow, okay, we're going to drop Dean's deal that needs to be funded on Monday, because we can address it in 3 hours from now and get it to him tonight rather than in the hour. And hey, Dean, I promised you an hour. I'll get it to you in 3. Don't worry about it. And if Dean freaks out, then maybe we need to get it to him in 2 hours. So it's just that make sense approach to what does the client want, need, and their perception of priority. By educating them on where we're at can usually help be able to shuffle the deck accordingly.
I like that answer. We asked that to a lot of our lender partners and get a lot of different feedback there. So I appreciate that. Risk management and compliance. How are unconventional borrowers like self-employed, real estate investors, or those improving their credit evaluated in short-term scenarios?
So this to me is underwriting risk rather than compliance risk. So we'll talk about it from that standpoint right now. And I go back to, we have a culture of compliance. We have a culture of risk management. That's something we leverage and value. So from risk, first principles is back testing their success. right? And sometimes the client and the broker may push for it's going to happen in 6 months, but it's okay if it's going to happen in 18 months, right? Like we look at it from a, call it real life, maybe sometimes conservative approach. It's okay if it takes 18 months. It's okay if they need to file not only their taxes for this year, but next year by pulling more money out of the business. We try to manage those expectations. Whereas the broker may think we want to hear it's going to be 6 months, but it's okay, Dean. It might take 18. We'll keep you posted. So from a risk perspective, we continue to engage the broker on the borrower's path to being able to exit. And we already talked about the real estate investor where we start with the end in mind. On the flip, that's easy profit. On the BRRRR, it's more so, okay, what is the debt coverage going to be? Like, are they going to hit the debt coverage ratio they need? Is it going to actually push out cash flow? And in turn, is a better way going to be able to refinance this? So from a first principle standpoint, is this client going to be successful? And the way that we gauge success is, are they going to be able to move to the path that makes most sense for them?
Yeah, I mean, that's a good answer. I think where I look at that from a compliance perspective, and this leads into my next question, is just how is Calvert adapting to regulatory changes, especially with FINTRAC that recently kind of entered our space in October of last year, changes within FSRA, RECA. How does those types of decisions impact it, especially when you're looking at the FINTRAC regulations?
Right. Yeah. So we really try to use regulations as a tool, as a benefit. We look at it from, we start with, as an alternative lending industry, we have a national body called the Canadian Alternative Mortgage Lenders Association. Dean, our president and CEO, was the chair, and we as Calvert were huge supporters to getting that spun up. The way that started was back in 2010 in the MIC and mortgage investment space. We had what would be our biggest regulatory change, where mortgages were considered a security. So we now needed to be regulated by the Securities Commission. Specifically for us, it was Alberta, and Alberta had very rigid rules. So we needed to spin up a whole new compliance regime that was even more nuanced and rigid than we've ever seen. So back to your question, by being on CAMLA and by being a major supporter of that, as we view it as stewards of our industry, making sure that the industry as a whole succeeds, ideally, we can understand proposed policy changes early and interact with them and try to influence them for what we believe to be the right approach, that line of sight piece. And then by having that line of sight, we as a company can start thinking about how is this going to impact us and what changes would we make? And sometimes by getting a view of it early, you're like, oh, this is a really good change. We should just implement that today. So we try to stay abreast and try to stay on top of and create the right structure of compliance. Now, sometimes, and I'll give you an example, compliance can be to a conflict of offering that effortless experience. So with new AML rules, because of our mentality, we usually go to a more yes, we try to manage the business approach with the compliance necessity. And especially early, we usually go to a more cautious approach. So we'll be overly compliant. And I forget because now I'm not on the underwriting desk anymore, but we were requiring 3 months bank statements always. And the brokers were like, guys, what the F are you doing here? You don't need this. The banks don't even need this. So we heard them, we dug deeper, and we're like, yeah, we misinterpreted this, we overstepped. We're going to take that down and create that make sense approach for the market, yet still achieving our standards of compliance. So does that make sense?
Totally.
We're looking at everyone as an opportunity, and the opportunity to us is A, achieve if not exceed compliance, yet B, achieve if not exceed how that impacts our brokers and borrowers.
Yeah. I mean, it's funny touching on that piece with AML and FINTRAC. I mean, years ago, a lot of private lending was a basic app, some credit bureaus, here's the property, here's the security.
That's what we saw.
Let's get the deal done.
Yeah.
Right. But now, I mean, I was on the panel the other day and we were talking about this, and it's from a broker's perspective, you actually can't take that approach because regulators need to know that you understand the file and you understand the information. Like you used to go to a private say, oh, he's getting 200 grand from his mom.
Yeah.
But now you need some level of verification.
Yes.
And the guy says he makes 100 grand on his app. You need some level of verification there, but there's a balance between obviously conventional A, prime, B, and then private. which obviously it sounds like you guys have, come to terms with.
Yeah. So we used to take that approach: app, credit, income.
Yeah.
But then what we would do from a client success standpoint is ask all those questions with the borrower. Like, we still interview every borrower we deal with. Whereas today it's document and prove it driven. Before, we used to just write it up in our CRM or our underwriting platform. So I think that is a huge benefit to the broker and the client by having a know your client, know your product standpoint. So you're doing your best to understand it. Yes, it makes work a little bit harder, but your clients are going to be way more successful because of that. So that know your client, know your product piece, where, okay, I know the client, I know what's happening, and then I know the lender sufficiently that this is a make sense product.
Yeah, I mean, it kind of leads into my next question here, which is more around technology and innovation. And, maybe you can chat about some of the tools and software that have streamlined your operations for what you're doing now, and how that benefits brokers, but also what are you looking at in the future when it comes to AI? Like, you already mentioned some of the automated appraisal approach and certain things like that. Like, where do you see this going for Calvert Home Mortgage?
From a 5-year strategy standpoint, we are going to enable a better experience in products through technology. And like, our ultimate vision is one tool that speaks to accounting, underwriting, marketing, BD, that optimizes for all that. Like, it literally looks at our approval ratios, our pricing, our clients, and makes real-time suggestions. It does some auto adjudication. Like, it will get there.
Yeah.
Because when you're on the cutting edge, you need a different level of understanding, and you're going to spend outsized money, whereas the, let's call it, evolution of it will eventually get there. So we need to balance that. We have a real strategy and are spending real money behind that. And to us, that is going to drive our sustainability. It's going to create better experience for our brokers, our borrowers, our bank, our people. Today, what we're doing with that is we are taking steps. So from a data standpoint, what we're doing today is, we call it DCM, data centralization, where all of our accounting, our book of mortgages, their performance, all of our underwriting, its performance, gets pooled into one data center. So that's step one, is getting that data into one center and having it really clean and knowing what it is. And then once you have that data lake, then you could start building the business intelligence tools around it. We already have really solid business intelligence tools. We use Power BI. I can slice and dice our pool right now between provinces, first, seconds, product types, borrowers, brokers. Like, that's all there for me, but it doesn't lead into like, okay, what is, for example, the average pricing for this deal type in this market?
Yeah.
Are we seeing a unique trend that I'm not catching? So we want to get there with that. And then from a tools perspective, I talked about Power BI. We just are launching a new tool within our accounting system, where it's more of a holistic NetSuite by Oracle type system, where it's built on a framework where we can plug in the various, like, loan management tool, our CRM, HubSpot. So it's just making sure that we're building our process and data tools on platforms that are going to be able to integrate. What I am learning is too often these platforms aren't built on that. Just a matter of time before they're done, because the world is going to where it all needs to be interconnected.
Oh, I couldn't agree more.
So that's kind of where we're at today, and then where we're going.
I'm just obsessed with technology and efficiency, and that's what it essentially does, is it just provides more efficiency for everything that we're doing. And if these systems aren't talking to each other and integrating, they're basically not going to survive.
I just want to touch on one more thing. Like, ideally, that integration piece should be with our partners. Like, imagine, like,
That's
we're
right.
fully integrated with you, and you can see the performance of us, our products.
Mm-hmm.
We can teach you about your business. You could teach us about ours. Like, our business, we talked about this when you guys first came in, is predicated on knowing the client. Like, we should be spending so much time with brokerages like yours to understand, what are you guys seeing? What are you needing? What are we missing? What can we do better? And the data can tell a lot of that.
Totally.
So we can make ourselves more efficient by just knowing what's happening with our deal flow.
You talked about the borrower interview, and it kind of leads me into just the overall borrower experience. Maybe you could just touch on some feedback from borrowers, especially the real estate investors and flippers. Like, what is the borrower experience when it comes to Calvert Home Mortgage, and how does that, give you an advantage?
Yeah, so first, it's as effortless as possible. By effortless, we define that as doing the work. And the work could be whatever the broker wants us to do. Like, we can literally take the app, And then, hey, here's all the information we need. Do you want to do it or do we not want to do it? Especially with the real estate investors, usually what it is it's an onboarding process at first. A lot of times the borrower will contact us directly. But from a process standpoint with brokers is once that borrower's been brought into us, they are your borrower for life. They can fire you and go to another broker, but they cannot come back to us direct. So all of a sudden you get that automated, and then I just call Deryk and say, hey, Deryk, this client's called me back. How do you want to work this one? What do you need for compliance? We can adapt to whatever the needs of the broker and borrower are from a client experience space.
That's unheard of. I'm very curious. How many brokers are asking your team to engage in client conversation, document collection, app collection?
So we have 44 brokers that do 45% of our business. And wow. I don't think there's one of them that doesn't like that
Smart.
feature.
Why would you not, right?
Like sometimes,
no brainer.
Sometimes, like, you'll get the deal from those non-top brokers that think that they have something to hide. But once you're a top broker, a lot of them will just come to us. Okay, here's all the things that you're going to perceive as negative that I know. Yeah. Here's why there's a deal. And when you find something out, the broker, it's disappointing that we can't do a deal, but the broker gets it. So the top brokers, you built that relationship and trust where they just love letting us run with the client.
I think I know the answer to this, but I'm going to ask it anyways. Pain points for brokers and how can they address them to enhance client satisfaction?
A lot of the pain points today are perceived through what we've talked about, like this continuing evolution of compliance, this continuing evolution of knowing your client, this continuing evolution of more docs. And I get it. More work for you guys. But again, it's like, firstly, talking it through to them, like just asking questions. And ideally by asking questions, you can align on, okay, yeah, this is extra work, but it's important work. It's good work. It's work that's going to be able to create sustainability and set your client and you up for success long term. And then again, okay, why don't we do 75% of this work for you? So that's kind of how we address it. Other pain points, certainly as it relates to our growth and scaling, brokers are used to calling me and like, no, call Caitlin. Caitlin is better than me at this. He's more equipped than me at this. If Caitlin needs it, where we talked about our underwriting, if Caitlin needs a decision made on a product or a price, he has the way to manage through that. Now that's easier said than done because it doesn't happen overnight. So absolutely there's been some learning curves where, like, for example, we were missing the market on price for about 5 months from last September through to Feb. I just wasn't seeing the right data points. I was more looking at approval ratios where it's like, no, we weren't seeing that deal. So in order to test for that, it is that client engagement. Like now we have a regime of like, talk to our best clients, document this, the AI can build the themes and we could figure out where to pull. So leveraging data to find the pain points before we even hear about them is ideal.
I love that.
But hearing from our clients is the most important way to address that.
I mean, that's a good kind of segue here. It's just like retention strategies, like how Calvert retains clients post-mortgage term. You have your renewals and refinances. You mentioned clients for life from a broker perspective. We know not all brokers are as engaged as they should be when it comes to renewals. What do you do to ensure you retain the client ultimately, especially these investor clients that are going to be repeat clients?
Outside of what we talked about, which is just kicking ass with product and service and having the best people work with the brokers, other things are in the renewal process. The broker will get contacted before the borrower. So we'll send that renewal doc out to the broker. Yeah. We don't charge for renewals, typically. Like sometimes the broker will convince us they're going to exit in 6 months. We'll be like, we're not sure. But sure, we'll reduce our fee by 50 bips. But if it lasts longer than 6 months, we're charging 50 bips, for example. But for the most part, we're not charging for renewal. We're continuously trying to engage the broker to engage that client to get that next deal. So that's a unique thing that we're doing. And certainly within our relationship action plan, we talked about prioritizing, like you give priority to our ballers, our best people, the people that we want to continue to win with. Where we're going to grow this business, double it at least in the next 5 years, it's going to be by doubling our key clients. Yeah. And there for sure are some right now that are not key clients that we will be able to move up, but it's working with best in class and winning their business. So right now, for example, Ontario, we've only been there 5 years. Today represents 35% of our funding. Wow. We know there's a massive opportunity for us, and we'll talk about that more with your team as you guys expand to Ontario to grow that. Like there's no reason that we have, I think, with relative certainty, best brokers in Alberta are our top clients. So why can't we do that in Ontario? Why can't we do that eventually in British Columbia?
Just on the renewal piece, I'm curious to hear just your scope on the Alberta market. I know regulators are starting to look at, in the private mix space, the renewal process and what lenders can and can't do. I mean, in the East in Ontario, there's horror stories.
Yeah.
People are not renewing, or they're charging significant fees that the clients aren't prepared to pay. We don't see a ton of that in BC. It's a little bit different. Like, pricing's a little bit sharper. It's more into.
Yeah, you guys have a very competitive market and very sophisticated market in BC.
Yeah.
Yeah.
What are you seeing in Alberta?
I would say similar to what you're seeing in BC, where in Alberta, we have lenders who have been around for a long time. We have lenders who are, from a regulatory standpoint, specific to securities, a lot more regulated. We have lenders that are here today and operating at scale that have been through multiple downturns, so they've been able to manage risk. And it is a competitive space. So you don't see that massive renewals. You don't see nearly as much bait and switch. And we pride ourselves on that. What we put in the commitment letter, what we tell the market, has to be accurate. And we do not charge renewals unless we talk about it upfront.
It's a huge piece for brokers to be aware of before you're placing a client with any lender.
Yeah, and we renew, again, at no cost, and we will renew as long as they're executing to the acceptable standpoint.
Yeah.
Like, okay, credit dip, but I can afford the mortgage and I have a plan. Like, basically, if they're serving our loan, we're going to work with them.
Yeah. What I'm hearing, it's a very collaborative approach with your brokers, especially the fact that you're willing to go out and reach out to the clients and do these things that you do to ultimately move the file forward quicker. Do you have any sort of co-branded retention initiatives or anything that kind of harnesses that even further with the broker, or is that something you're considering?
We're absolutely considering whatever works for the broker. Yeah. Today, co-branded is like everything that we produce from an educational standpoint, we open source it. So we want the broker to co-brand it or just brand it their own. Like that flip analyzer, and we build a flip package that if you want to go out and find real estate investors, you can call it a better way flip product and go to market with it.
Yeah, I like that a lot.
So like that kind of stuff for sure. And the more of that we can do, the better. Even like our product sheets are written in a way where you can market them as more your product. Even our marketing content, we will build it in a way that you can easily share it under your umbrella. So we do monthly economic reports that we've been doing for 15 years now for the markets in which we lend in. We just aggregate what we believe to be the most important economic and real estate data for Ontario and Alberta and the larger markets. We have a lot of realtors that just use that as theirs. We have a ton of brokers that just use that in theirs. So like the more ideas that we have where you're like, here's what I need to win, let us know and we'll build it out.
Yeah, that's a follow-up meeting for us for sure, because like I think we can do some damage with that. And I appreciate that a ton, to be able to take those tools and leverage them and ultimately get more business because of it.
Get better.
Yeah.
Have more tools. Elevate the game is the goal.
So in closing, future outlook, how do you envision, Calvert Home Mortgage evolving over the next 5 to 10 years and continue to be a leader in this space, because you truly are?
Yeah, so we've talked about the evolution of where we see technology going to better serve clients, integrating better with our partners. Absolutely, it's continuing to focus on product and service elevation, like what does the market need and how do we get there? It's certainly continuing to evolve our speed. Like ideally, from that standpoint, we want to exceed what the broker and client think they've needed. So while we listen to the broker, what they need, like where is the opportunity to even exceed that? On the whole, it's just serving more Canadians on their residential mortgage needs. Like we plan to continue to be laser focused on residential mortgages in Canada. Certainly there's an opportunity for us to expand geographies.
Yeah.
And we want to do that while managing risk. So sometimes that's at conflict with each other. But yeah, it's just continuing to evolve and revolutionize the business around the service to the market. And what we know is that will always change from a market dynamic, like what products are needed today and why. The competition from a bank, B lender has a stake at how we do that. and even like what we talked about CMHC with MLI Select, there's going to be continued policy changes around how do we create more housing, more affordability. Hopefully, we're starting to hear it from the Liberal government, more productivity from Canadians as a whole, which if we start getting serious about opening up the economy, then we got to follow that as well.
Yeah.
Like certain areas are going to see outside success, and you guys as brokers, we as lenders need to be paying attention to that and serve where the success is going.
Absolutely. No, this is like just a great conversation. We really enjoyed just spending time with you and learning from you and what you're doing here. You truly are a leader. Like, I can't wait for you to launch in BC. So you're definitely going to get some follow-ups from us on that. But overall, yeah, thank you for your time. It was a pleasure.
Thank you. And thanks for hosting us.
Oh, our pleasure. I echo my appreciation, and from your guys' lens, the leadership in the market and what you guys have built and why you've built it and how you built it for the success of your brokers and clients. I love it. Thanks to anybody that listened. Hopefully we provided some value here.
Oh, we certainly did. Awesome, man. Thank you.
Thank you for tuning in. If you found value in this show, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, and YouTube. Your support is incredibly appreciated. We also welcome your reviews and feedback, which are crucial in helping us deliver outstanding educational content. Feel free to share your thoughts. A 5-star review would be fantastic if you think we earned it. Lastly, a vital announcement about Backpack Buddies, our chosen charity for 2025. This remarkable organization addresses a hidden hunger issue many are unaware of in British Columbia. While school districts provide meals during school hours, numerous children face food scarcity at home, particularly during the weekends. Backpack Buddies steps in to support these vulnerable children, ensuring they have easy to prepare, familiar food for weekends. This is achieved through collaborations with schools and an extensive distribution network. Your contribution can make a significant difference. With just $20, you can give a child in need a food bag from Backpack Buddies filled with enough meals and snacks to sustain them over the weekend and more. Once again, thank you for listening, and see you on the next one.